Public service announcement. IRS audits have increased and your business is next. In this video, I'm giving business owners 5 ways to fly under the radar, and you need to know why. No one likes getting audited by the IRS. Let me be the first to tell you, you want to avoid that at all costs. But unfortunately, it's a risk that comes with being a taxpayer where we are and when you have to file taxes. In this video, I will show you 5 reasons the IRS might audit you and how you can avoid getting singled out. Because I don't know anybody that is signing up to say IRS audit me, because I need you to know an IRS audit is no joke. Even if you have all your ducks in a row, you can still end up owing IRS a lot of money because you don't know what you're doing. The last audit cycle, IRS audited 1.2 million taxpayers. And so the odds of you being audited as a small business owner are pretty high. That is the reason why you gotta make sure you know exactly what to do. And some of you may think audits are random, and maybe some of them are, but unfortunately, IRS has some real rules and criteria on the reasons why they audit taxpayers, and I wish I knew it, but I don't know it. But what I do know, there are some things you can do to prevent your return from flagging for audits, such as inconsistencies and errors because you're self-preparing those returns. Are you using professionals that don't know what they're doing? Let's just face it, everybody is not created equal. And here's the thing, IRS audits may require you to go to IRS's office and sit before an auditor. And trust me when I tell you, you're not equipped to do that because it is very intimidating. I myself handle that. I can do it. I've done it for years. But taxpayers, when they do that, they start shaking in their boots. So the most important thing that you can do is understand what I am going to be sharing with you in this video, and to make sure you have all your documentation documented appropriately. Because sometimes, even when you have all your documentation, you can still get yourself in trouble. There were times when IRS during COVID would allow you to mail in your documentation, and then you'd get back a letter telling them how much you would owe, and you didn't even have to talk to IRS. But those days are over. That's why I'm going to give you the 5 reasons why IRS will audit you so that you can avoid getting yourself in this slinky. The first reason IRS typically audits is because you are self-employed. You know who I'm talking about, you self-employed individuals who try to pretend like you're not self-employed because you're still working a W-2 job. But if you got a side gig, a side hustle, you're doing some work for somebody, you're getting paid, somebody's Zelling you, Venmoing you, PayPaling you, you know exactly what I'm talking about. You are self-employed. And when you are self-employed, that comes with a lot. And many of you don't even know what you should be doing. And one way that self-employed people get in trouble is that they misclassify their expenses. I cannot tell you how many tax returns I see where people come into me and previously prepared a tax return, and they have categories that say Verizon or categories that say Home Depot. To IRS, what's a Verizon? What's a Home Depot? That's not appropriate categories, but you wouldn't know that because this is not what you do. That's why it's so important that you do what you do and you allow the professionals to be professionals. And self-employed people, you have to pay self-employment tax. And you may be thinking, Carla, what is self-employment tax, right? I paid my income tax. Oh, income tax is different from self-employment tax. Self-employment tax is above and beyond the income tax, people. It's that 15.3% extra tax that you don't calculate because you're unaware of it, and you end up flagging your tax return for an audit. So you got to be real careful as a self-employed individual. The second reason why people get audited is unreported income. Oh my gosh, I need y'all to knock it off. Stop thinking that IRS does not know how much money you made. Stop thinking you can hide your money from IRS. Stop thinking that, oh my gosh, they're not going to find out because he told me or she told me they weren't going to send me a 1099. Stop. Because they might not send you that 1099. I can guarantee you they want that deduction on their tax return. So they sent that 1099 to the IRS. And you're thinking, oh, I'm only going to report income based on the 1099s I receive. And your tax return goes into IRS. And you know what happens? IRS has information that you do not have. They have all the 1099s that you don't have because you didn't receive them. So now your tax return is going to get flagged for an audit. You got to stop it, people. And I'm going to tell you something else you got to stop. You got to stop going to the bank with a check, doing a deposit, and lessing back cash, where your check may be $5,000 and you take $1,000 cash out and you only deposit $4,000 thinking that's all your income. Because if you get audited, IRS is going to request your deposit summaries from the bank and they're going to find out that you have unreported income. So you got to knock that off too. The third reason why taxpayers get audited because they have disproportionate income to expenses. IRS is aware of that trick too, where you may decide, oh, I'm just going to report $100,000 of income and I'm only going to report $10,000 of expenses because maybe you're trying to qualify for a house or trying to qualify for a loan or you're trying to do something. It doesn't matter. If you're not reporting all of your expenses and your income and expenses is disproportionate compared to others, you're going to get flagged for an audit because IRS will compare your tax return to other people that do what you do. For example, I'm an accountant. There is a business code that goes on my tax return where they're going to compare me to other accountants. They're going to compare me by income levels, geographical area, number of employees. And if I fall out of whack and I stick out, like rich people stick out, right? IRS is going to flag me for an audit. This is not the time to be above the norm. This is not the time to be special. Trust and believe me, you don't want to be that. You want to be average. You want to blend in with the crowd. You want to just fly under the radar so that IRS is not going to flag you for an audit. By the same token, if you only have $10,000 worth of income and your expenses are 50 grand and you're running a loss of 40 grand, IRS is going to be like, hello, where'd that other $40,000 come from? Did you run up some credit cards? Do you have some gifts? And if you have that many people gifting you that much money, IRS wants to meet those people too. So you gotta be careful. You gotta pay attention because IRS is paying attention. The other fourth reason why is filing your tax returns late. Oh my gosh, you gotta stop doing that. I don't care, people. If you never ever show up on time for anything, show up on time to the IRS. They are not the people that you want to be late for dinner for. Because when you file your tax return late, you get special seating. You get special attention. And if you're looking for special attention from the IRS, have at it. Because I don't know anybody that wants special attention from the IRS. They are not the people that you want to be doing things late for. So file your tax returns on time, because when you don't, you are subject to a 5% underpayment penalty, a maximum of 25%, and if it's fraud involved, you can be hit with a 75% fraud penalty. And why would you want to spend more money paying IRS penalties? That doesn't even make any sense. It's silly. So file that tax return on time. March 15th if you're a business owner, April 15th if you are an individual, or file a timely extension by those due dates. You know the rules, follow the rules. The fifth reason why is because of complex tax returns. And you may be saying to yourself, Carla, what's a complex tax return? A complex tax return is a tax return that has a Schedule C, sole proprietor business, a single member LLC. Maybe you have a Schedule E because you have some rental properties. Maybe you have K1s because you're flowing through income because you have an S Corp or a partnership or a multi-member LLC. That is a complex tax return. And to IRS, a complex tax return takes hours to prepare. They have done studies on this. A complex tax return to IRS takes a tax professional to prepare it. And when IRS sees a complex tax return being prepared by a person self-prepared, you're going to get flagged for an audit. So do not self-prepare your taxes. I've been doing this for a long time, years. I follow tax law changes. I have a master's in taxation. It has taken me a long time to figure it out. I want to know, how on earth are you preparing a complex tax return? Please explain it to me. Because if you can't explain it to me, you're going to have to explain it to the IRS. So you need to knock that off and stop doing it. The payment you're going to pay a tax professional is worth the investment unless you want to be up close and personal with IRS. And if you do, have at it, because that is exactly what is going to happen. Now that you guys know the 5 reasons why your tax return can be flagged for an audit, you're self-employed and not filing your tax income and expenses properly, you're unreporting your income and expense is disproportionate compared to others, you have a complex tax return that's being self-prepared, and you're filing your tax return late, you guys now know, whoo, I am so glad that you guys now know exactly what time it is. But now that you know better, you gotta do better. No more excuses. That's why I want you to like, comment, and subscribe so I can keep you updated on all things tax.